$90,000. That's how much the U.S. national debt grows every single second. Not every minute, not every hour, every single second. I want you to actually feel that. Look at your watch right now. Count 5 seconds. 1, 2, 3, 4, 5. In those 5 seconds, America just added $450,000 more to its debt. And by the time you finish watching this video, the U.S. will have borrowed roughly $54 million, more than when you hit play. And here's what genuinely messed with my head when I found this out. Nobody seems particularly worried. The stock market is up. People are booking summer vacations. Politicians are giving speeches. Life goes on. So I started asking myself, is $39 trillion actually a problem? Or is this just a scary number that sounds terrifying but doesn't really affect your life? I went deep on this. And what I found was way more complicated and way more personal than I expected. Here's the thing nobody tells you at the start of this conversation. Almost every country on Earth carries debt. Every single one. Germany, Canada, Switzerland, Qatar. Japan owes more than twice its entire economy. Even Gulf states swimming in oil money carry national debt. So, national debt isn't some sign of failure. It's basically just how modern governments operate. Think about it this way. You probably know someone who makes solid money, has a mortgage, maybe a car payment, some student loans. Are they broke? No. They're managing debt like a normal adult in 2026. Governments do the exact same thing, just with a few more zeros. And the reason countries borrow instead of just printing unlimited money actually makes sense once you hear it. When governments print cash without limits, they flood the economy. Too much money chasing the same amount of goods means prices explode. That's hyperinflation. Zimbabwe printed a $100 trillion bill in 2008. It literally couldn't buy groceries. Venezuela did the same thing more recently. The results were catastrophic. Debt, weirdly enough, keeps governments more honest. Because debt comes with interest. And interest has to be repaid. That's the leash. The problem is, America has gotten very good at extending the leash. As of right now, in 2026, total U.S. debt stands at $39.4 trillion. To put that in perspective, that works out to roughly $118,000 per American citizen. Every man, woman, and child, your kids included. Your share of the national debt is more than most Americans have saved for retirement. And it's not slowing down. At the current pace, the U.S. hits $40 trillion sometime around September. Now here's the question everyone asks. Who is actually lending America all this money? Which bank has $39 trillion sitting around? The answer is nobody. America borrows from 3 completely different sources. Source 1, Americans themselves. When you buy a Treasury bond, you are literally lending money to the U.S. government. Your 401k probably owns some. Your pension fund almost certainly does. About $7.6 trillion. Roughly 20% of the entire national debt is intragovernmental debt. That's government agencies like Social Security lending surplus funds right back to the federal government. The government essentially owes money to itself. Source 2, foreign governments. This is where it gets interesting. Foreign countries hold over $9 trillion of America's debt, and the rankings might surprise you. Japan is the single largest foreign lender, sitting on $1.21 trillion in U.S. Treasury bonds. Number 2, not China. It's the United Kingdom at $937 billion. China comes in third at $651 billion. And here's the thing. Most people don't know. China has been quietly selling its U.S. debt since 2013. It's dropped from $1.3 trillion all the way down to $651 billion. China is exiting, not buying. Number 4 on the list is the Cayman Islands at $471 billion, which sounds bizarre until you realize that's basically where global hedge funds park their money. A tiny Caribbean island technically lending America nearly $500 billion. Source 3. U.S. financial markets. Banks, mutual funds, insurance companies, pension funds, the Federal Reserve all holding U.S. debt because it pays reliable interest and is backed by the full faith of the U.S. government. Okay, so $39 trillion sounds terrifying. But honestly, the total debt number isn't what concerns me most. It's this. The U.S. government now pays over $1 trillion per year in interest alone. Not building roads, not funding schools, not paying doctors, just servicing the cost of money already borrowed. Here's how to put that in perspective. The entire U.S. defense budget, every aircraft carrier, every military base, every soldier's salary comes in around $886 billion. Interest on the national debt is now bigger than the entire defense budget, and the U.S. is projected to run a deficit of approaching $2 trillion in fiscal year 2026. That gap between what the government spends and what it collects in taxes has to be filled by borrowing more, which creates more interest, which creates a bigger gap next year. You can see exactly where this is going. Here's where I want to slow down and push back on the panic for a second. Because debt is not automatically evil. The U.S. interstate highway system debt funded. The internet came from government-funded research. COVID stimulus checks borrowed money that genuinely prevented a depression-level collapse for millions of American families. Borrowing to build something that generates future returns, that's not reckless. That's literally what every successful business does. The metric economists actually use is the debt-to-GDP ratio. How big is your debt compared to the size of your economy? Same concept as personal finance. A surgeon with a $500,000 mortgage isn't in trouble. A minimum wage worker with the same debt is in serious trouble. Same number, completely different context. For most of American history, that ratio stayed comfortably below 60%. Today, it sits at approximately 123%, meaning America owes more than its entire annual economic output. The last time it was anywhere close to this level was 1,946. Right after World War II. The critical difference? After the war, the debt came down as the economy boomed. Right now, every single projection shows it going higher. Here's the part most finance videos skip entirely. What does any of this actually mean for your life? More than you'd think. When the government borrows trillions, it competes with every other borrower in the economy for the same pool of available money. More demand for money pushes up the price of money. The price of money is called an interest rate. Higher government borrowing means upward pressure on interest rates, which means your mortgage costs more, your car loan is more expensive, your credit card rate climbs higher. The $39 trillion national debt isn't some abstract number floating in Washington. It quietly makes your financial life more expensive every single year it grows. And here's the uncomfortable projection. The Congressional Budget Office estimates that by 2036, publicly held debt rises to 120% of GDP, surpassing even the World War II peak of 106%. Some independent analysts project gross debt reaching $63 trillion by 2034. Interest expense alone is projected to hit $2.5 trillion annually by 2035. That's 22 cents of every dollar the government spends just on interest. Ray Dalio, who built the world's largest hedge fund, has spent years publicly warning this path is unsustainable. Federal Reserve Chair Jerome Powell said it plainly. The level of debt is manageable, but the path is not. When the people who actually run the financial system start saying that out loud, it's worth paying attention. So here's where I land on all of this. National debt isn't inherently evil. Every country carries it. Used right, it genuinely builds things worth having. America's ability to borrow cheaply because the world trusts the dollar is a real and remarkable privilege, one most countries would trade anything for. But there's a difference between borrowing to build and borrowing to delay. Right now, the U.S. is doing a lot of both. And the math on the delay side is getting harder to ignore with every passing year. The $39 trillion question, who pays for it eventually? Honestly, probably us. Through higher taxes, higher borrowing costs, reduced government services, or inflation quietly eating the value of what we've saved. The best move isn't to panic. It's to understand the system well enough to position yourself on the right side of it. That's exactly what this channel is for. Subscribe, because next week, we're getting into what rising debt actually means for your 401k, your mortgage rate, and what smart investors are doing about it right now. See you there.